Today, our business insight is going to be rich because our conversation on the capital market ends. We round off with treasury bills, debentures, and ETFs. So, welcome. I am Olaoluwa Awe. Before we face our business, let's provide you with some business trends we have collated for you. Stay tuned for commodity, stock, and currency reports as well. Welcome to the business news. I am Olaoluwa Awe. Mobile network operators in Nigeria are blaming political interference for the ongoing deadlock concerning an unpaid debt of around 150 billion naira owed by banks to telecom operators for unstructured supplementary service data USSD usage since 2019. Despite attempts by regulatory bodies like the Central Bank of Nigeria (CBN) and the Nigerian Communications Commission (NCC) to mediate, banks have not settled their dues, creating an accumulated debt. The chairman of the Association of Licensed Telecoms Companies of Nigeria, Alton Gbenga Adebayo, highlighted the issue at the Nigeria Telecoms Indigenous Content Expo (NTICE) 2023 in Lagos, emphasizing the commercial nature of the dispute and urging the new communications minister to ensure regulatory autonomy. Adebayo also raised concerns about unsustainable pricing for telecom services and the departure of tech experts from Nigeria. Nigeria holds 82% of telecom subscriptions and 29% of internet consumption in Africa, according to the Nigerian Communications Commission (NCC), despite ranking 11th globally in internet penetration and 7th in mobile phone usage. The country's Network Readiness Index (NRI) is ranked low, being 109th out of 131 countries in 2022. The NRI measures the role of information and communication technology (ICT) in economies, evaluating technology infrastructure, governance, people, and impact. The solutions to Nigeria's low NRI could include investing in technology infrastructure, enhancing governance and regulatory frameworks, fostering digital literacy and skill development among the population, promoting innovation and research in the ICT sector, and creating an environment that encourages private sector participation and investment in the digital economy. Moving on, the United Kingdom government's latest immigration data has revealed a 73% increase in sponsored student visas granted to Nigerians within a year, rising from 33,958 in June 2022 to 58,680 in June 2023. This surge in visas is attributed to the UK and other European countries actively seeking Nigerian students for their economic benefits and potential to fill employment gaps. British boarding schools consider Nigeria a growing market for education, and UK's immigration system relies on educational institutions to sponsor students, aligning with the 2019 International Education Strategy to host over 600,000 international students yearly by 2030. Notably, Nigeria leads independent study visa holders, though recent UK visa policy changes may impact accompanying families. Moving on, a recent report from the International Monetary Fund (IMF) has revealed that China, the United States of America, Russia, and India are the primary contributors to a global expenditure of $1.3 trillion in fuel subsidies aimed at alleviating the impact of surging fuel prices. Nigeria's state-owned NNPC Limited disclosed that the country spent 4.39 trillion naira on petrol subsidies in year 2022. The study, which analyzed data across 170 countries and indicated that global fossil fuel subsidies collectively reached $7 trillion in 2022, equivalent to around 7.1% of the global gross domestic product (GDP). The report highlighted that explicit subsidies have more than doubled from $0.5 trillion in year 2020 to $1.3 trillion in year 2022. The report underscored the substantial and widespread difference between efficient prices and retail prices for various fossil fuels. Most of the worldwide subsidies for fossil fuels result from their lower than needed pricing due to local pollution, global warming impacts, supply expenses, transportation effect, and reduced tax revenue. Global crude oil production decreased by 9.65% month-on-month to 40.12 million barrels in July 2023 compared to June's 44.40 million barrels. Year-on-year, production was down by 1.52%, and Nigeria's daily crude oil production averaged 1.29 million barrels in July, a decline of 185,916 barrels from June and a decrease of 19,912 barrels from July 2022. Forcados Oil Terminal saw a significant reduction of 4.61 million barrels in total crude oil production, dropping to 3.29 million barrels in July from June's 7.90 million barrels, marking a 58.39% month-on-month decrease. However, Escravos and Kwaibo recorded increased crude oil production in July compared to June, rising by over 390,000 and over 334,000 barrels to reach 4.87 million and 4.12 million barrels. Moving on, renowned tennis legend Serena Williams, often hailed as the greatest female player in history, is on the verge of reaching a remarkable net worth of nearly $300 million. Initially listed with a net worth of $260 million among America's self-made women in 2023, a value has surged to $290 million. Although retired from professional tennis at 41, Serena remains one of the highest paid athletes globally, earning approximately $300,000 in winnings and possessing endorsement worth an outstanding $45 million. Beyond sports, she is a prominent venture capitalist, having established Serena Ventures, which invested $3.3 million into Nigerian firm Steers Incorporated and supports numerous startups worldwide. And sandwich chain Subway is set to be sold to Rock Capital, a private equity firm, for $9.55 billion. This decision comes after a competitive bidding process. The deal includes certain conditions called an earnout that differs part of the payment based on Subway's cash flow meeting specific milestones. The sale is valued at $8.95 billion, excluding the earnout. The sale could make Rock Capital one of the biggest restaurant operators globally. The deal is expected to close within 12 months and has a 4% breakup fee in case of regulatory issues. And Turkey's central bank has raised its key interest rate by a big 7.5%, reaching 25% and showing a change in how Turkey handles its economy. The country's leader, President Erdogan, wanted lower interest rates even if it caused higher prices, aimed at making investors feel more confident about Turkey's economy. But Turkey's inflation rate for July was almost 48%, and experts say it's probably much higher. To fix this, the central bank's decision means they will make it harder for businesses to borrow money, which can help control prices. And as it's our practice on Business Insights, it is time to bring you updates from the capital, commodities and currency markets, so stay tuned. Welcome back to Business News. These are the market trends monitored for you since yesterday, August 24, to today, August 25, 2023. And we'll start with the Nigerian Stock Exchange. At the close of yesterday's trading session on the Nigerian Stock Exchange, NGX, over 583 million shares exchanged hands in 6,968 deals. This trading activity corresponds to a total market value of over 12 billion naira. When compared to the previous trading day, there has been a notable improvement in several key metrics. For example, trading volume increased by 67%, turnover improved by 219%, and the number of deals increased by 12%. The current overall market capitalization of the Nigerian Stock Exchange stands at 35.8 trillion naira. But doing a further analysis, a total of 115 equities listed on the NGX participated in the day's trading. Among them, 19 stocks ended the day with gains, while 39 stocks experienced losses. Notable gainers include Dangote Sugar Refinery, which saw a 10% increase in share price, closing at 44 naira per share. Other gainers include National Salt Company, Transco Nigeria, and Computer Warehouse Group, all of which also gained 10%. On the losing side, FT and Cocoa Processors experienced the most significant decline, with its share price decreasing by 9.95% to 1.81 naira per share. Other notable losers include Red Star Express, Learn Africa, and Northern Niger Flour Mills, with price depreciations of between 9.93% to 8.3%. Transco Nigeria had the highest trading volume of the day, with 144 million shares traded. It was followed by Sterling Bank, 63.3 million shares, Access Holdings with 54.7 million shares, and Guaranty Trust Holdings with 42.8 million shares. And away from Nigeria, at the close of the last trading session on the Johannesburg Stock Exchange JSE, a total of over 290 million shares were traded in 300,359 deals, resulting in a market value of more than 15 billion rand. Compared to the previous trading day, there was a decline of 23% in trading volume, a 26% decline in turnover, and a 15% decline in the number of deals. The current total market capitalization of the Johannesburg Stock Exchange stands at 18.9 trillion rand. A total of 313 equities listed on the JSE participated in trading. Among them, 181 stocks ended the day with gains, while 115 stocks experienced losses. Notable gainers include Cefaco Holdings, which saw a 24% increase in share price, closing at 0.93 rand per share. And other gainers include Steinhoff International Holdings, Shaftesbury Capital, and Harmony GM Co., with share price appreciations of between 20% to about 10.97%. On the losing side, Kibo Energy experienced the most significant decline, with its share price dropping by 50% to 0.01 rand per share. Other notable losers include Go Life International Limited, Transco Group Holdings, and African and Overseas Enterprises and Share, with price depreciations of between 50% to 18.69%. Among the most actively traded stocks, Redefined Properties recorded the highest trading volume, with 16.2 million shares traded. It was followed by Growth Point Properties with 14.2 million shares, First Rand with 13.4 million shares, and Old Mutual with 12.1 million shares. And that's the stock market report for today. Now, in the currency market landscape, various trends have come to the forefront, each with its distinct value. Among these trends, wheat has garnered significant attention, with its current value standing at 607 US cents. The precious metal gold holds a prominent position, notably valued at 1,918.2 US dollars. Running in parallel, silver closely tracks gold with a valuation of $24.18, while copper follows suit, albeit slightly behind at $3.77. Shifting focus to the energy sector, Brent crude has solidly positioned itself in the market, showcasing a stable rate of $83.5 per barrel. These figures collectively paint a picture of the ongoing trends and dynamics within the current market landscape. Before we move on, let's dwell more on the impact of gold prices in the United Arab Emirates. Now, gold prices in the United Arab Emirates and globally have risen due to a decline in the US dollar and treasury yields. The price of 24-karat gold opened at 232.75 dirham per gram, up from 230.5 dirham the previous day. Other variants like 22 karat, 21 karat, and 18 karat also saw increases in their opening prices. As of UAE time, spot gold was up 0.15% at $1,920 per ounce. Richard Snow, strategist at Daily FX, noted that while gold remains within a descending channel, it has found support above $1,875 and has risen due to easing yields. However, he mentioned that the Federal Reserve expected to keep interest rates higher for a longer period. Gold's potential for upward movement might be limited. The increasing yields on risk-free assets like U.S. Treasuries pose a challenge for gold, as these assets provide a rising risk-free rate of return. And conclusively, let's take a brief look at the latest currency exchange rate in Nigeria's parallel markets. The US dollar is currently valued at 900 naira for purchase and 901 naira for sale. British pound is quoted at 1,145 naira for purchasing and 1,160 naira for selling. The euro's official exchange rate is set at 950 naira for buying and 960 naira for selling. And that's the market trend for now. I am Olaoluwa Awe. After this, we'll conclude our conversation on the capital market. We round off with treasury bills, ventures, and ETFs. Don't forget, and don't go away. Welcome back to Business Insight and Souq News. I am Olaoluwa Awe, and today we round off all conversations on the capital market, at least investments that you can venture into in the capital market, especially here in Nigeria. And I must really thank all of the resource persons that have engaged on the program, from Ahmed Jayola to Lateef Jimo and the amiable Professor David Adori. And fortunately, he joins me on this last lap to talk about debentures, treasury bills, and ETFs. We may have hinted on what ETFs are in previous editions. You can go to our YouTube page to check that. But today we'll be talking about, how you can really thrive in this market. So welcome on board, Professor David Adori. Good morning once again. Okay, Professor Adore, could you please unmute yourself so that we can hear you clearly?
Oh, very sorry about that.
Oh,
Good
thank
morning
you.
again, Olaoluwa,
Thank you very
and good
much.
morning to all the viewers.
Yes.
Very happy to be with you on a beautiful Friday morning.
Yes. I really must commend you for the good job you have been doing since the beginning of the week. I know that stock registers and the stock market is a very specialized market. A good number of people really can't make sense of these things, and that is why really I must appreciate you, because we have been breaking these terms down for a week now. We have been explaining what they are, what are the opportunities for investors, how much money can you make, how do you run it, reducing your risks, because as with every other business, there are risks. But today, Professor Adori, let's talk about debentures. What are debentures and what are the opportunities in this for people?
Okay, debenture is the legal right emanating from lending to a corporate borrower, usually evidenced by a title document in form of a bond or debenture certificate. And so generally you hear people talking about debenture stocks, you hear people talking about development stocks, and also common stocks. And so to differentiate equities essentially from debt, the issue of debenture comes in to let the investing public know that the debenture stock is a debt instrument issued by a corporate borrower to borrow from the investing public in deference to common stock, which is an equity security issued by the company to bring in new owners into the enterprise. So, but there are quite a lot. Okay, let me listen. It's like you want to ask a question?
No, so in simple terms, if I want to invest in debenture or I want to get a company's debenture stock, what does it really mean? What exactly am I buying? What am I giving? What are they giving back?
Okay, so a debenture stock, like I said, is not different from what we call a corporate bond. In fact, the terminology is a little bit different in the English-speaking areas. They try to differentiate the bond issued by corporate bodies and call it debenture stock, while in the American system, usually called a corporate bond. But however, a bond is a unit of debt that is owed an investor. And so if it is a debenture stock, it's very, very important first to understand that it comes with a lot of features. There are different features tied to a debenture stock.
Professor Adonri, before you move on, could you please speak louder so that we can hear you?
Okay, can you hear me now?
It's better now, thank you.
Is better?
Yes.
Okay, thank you very much. So first of all, before we go into the buying and selling of debenture stocks or corporate bonds, let me inform the investors that the debenture stock or bond comes with a lot of features. And these features, first of all, are the basic ones that relate to the fact that the bond is redeemable or convertible, or it has a fixed or floating interest rate, whether it is secured by fixed or floating assets or is unsecured, whether it is a mortgage-backed debenture. The yield on the debenture too is very, very important together with the tenor. So you can see that the features are different. Therefore, depending on the borrowing objectives of the borrower, the corporate borrower. The debenture or corporate bond can be structured in such a manner as to achieve the predetermined objective. So like I
Now,
said, some of them,
Professor Adori, some
yeah.
people will say that debentures are like loans issued by some of these companies to investors with a promise to pay them the exact amount at a particular time in the future, and then maybe little interest on it at other times in the future. And they will say that unlike the secured bonds, that debentures are not backed by specific collateral, and it is only relied on the creditworthiness of the entities or the issuer to attract investors. Do you agree with that?
No, that was why when we started the discussion, I said the terminologies are different, depending on whether you are looking at it from the perspective of the British angle or the American angle. And in between, there are flexibilities in the structuring of debentures. In some instances, the Americans see the debenture as an unsecured loan stock issued by a corporate enterprise and is based on the just the reputation of the enterprise, that the enterprise will meet its obligation to the investors as promised under the trust deed. But under the British system, the terminology means the director is completely different. And that is that a debenture is structured to be secured, either a mortgage-backed debenture or a debenture that is secured by the floating assets of the enterprise that is borrowing the fund from the investing public and promise to pay a certain interest rate. All these are encapsulated in the trust deed, which is more or less like the memorandum of understanding or covenants agreed upon between the issuer and the investors, with the trustee representing the interest of the investors as contained in the trust deed. But in the Nigerian system, which I will want to brief investors on, because that is what we use there, although it's a little bit changing now in nomenclature. In the past, we usually had a lot of different types of debentures traded in the bond market in Nigeria. A lot of them were redeemable, unsecured debenture stocks, or mortgaged debenture stocks, or irredeemable debenture stocks, or convertible debenture stocks, or floating rate or fixed rate debenture stocks. So the features are completely different and structured differently. So we don't really have a hard and fast rule that this is how a debenture stock should be structured. I hope the clarification is clear.
It's understandable. Thank you very much, Professor Adori. You were about to get into the forms of debenture to explain the differences and the opportunities therein. So please go ahead.
Okay, so just like I mentioned, a lot of people who have the American background see the debenture stock, which I said is a loan issued by a corporate issuer to borrow from the investing public. They see the unsecured debenture stock is based on the full faith of the enterprise, that the enterprise is it has solid fundamentals, that it will not default in the payment of the payment of interest, and so there is no need for the loan to be collateralized by security. So that is the unsecured debenture stock. The unsecured debenture stock may also be redeemable. That means that it has a tenor. Let us say an unsecured debenture stock with about 5-year tenor. It means that at the end of 5 years, the principal amount of money that was invested by the investor will be redeemed. That is that it will be paid back at the end of the tenure when it matures in 5 years. Okay, so that is called the maturity period of the debenture. So all the principal amount that was invested by the investor will be paid. But periodically, we have debentures that pay interest either quarterly or half yearly or annually. So that is for the unsecured debenture. Then for the secured debenture, it is usually secured by a mortgage charge on the assets of the company. And the assets of the companies are usually fixed assets or floating assets. And so when you have a mortgage charge on such on the assets of the company to secure the debenture, it therefore means that there is a legal mortgage charge that should there be a default based on the provisions or the covenants in the trust deed, the trustees can act on behalf of the investors to to take possession of the fixed asset over which there is a legal mortgage. It's also possible that you have an equitable mortgage security as collateral for the venture. So in which case the equitable mortgage charge will be used as a basis of realizing the collateral if there is a default in payment of the principal or interest by the borrower. But there's usually a sinking fund attached to a debenture stock to ensure that the corporate borrower pays an agreed amount into the sinking fund such that it would have accumulated to a sizable critical mass that will enable the repayment to be effective when the time for redemption comes. And so you therefore, I've spoken about the unsecured debenture, I've spoken about the secured, we can be secured on the fixed and floating assets. The floating assets of an enterprise are generally the stocks or the funds owned by the enterprise that are in bank accounts or in liquid securities. So all of them can be applied to secure the loan borrowed by the corporate borrower.
Now,
called the debenture stock.
Thank you, Professor David Adori. Now, let's talk about how common debenture trading is here in Nigeria, considering the fact that it's not a very common word in the larger market like pepper, tomatoes, and foodstuff and all of the things we know. Is it really something that people trade a lot in Nigeria compared to other types of stocks?
Yeah, as a matter of fact, when the Nigerian capital market started in 1961, when trading started, there were about 19 securities that were listed on the secondary market of the Nigerian Stock Exchange. Out of the 19 securities, 17 were actually debt instruments, majority of which were debenture stocks or corporate bonds. So the market actually started ideally as a debt platform, and the popularity of the market was built on that platform for a very long time until equities started emerging due to indigenization and all other policies. But at the time, debenture stocks were also occupying a very high pride of place in the market when we had a lot of redeemable debenture stocks, convertibles, secured and unsecured debenture and mortgage secured debenture stocks listed in the secondary market after they were issued in the primary market by corporate issuers. But along the line, the corporate bonds market faded away for several reasons, which we may probably discuss a little because they are too numerous to drill down on now. But as we speak, the corporate bonds market is emerging in the secondary market under NGX, but it's not as traded as the sovereign bonds or public bonds issued by government organizations like federal government, states, and local governments. But however, we have a lot of debenture stocks now. But if you take the official list of NGX and look at the bond market, you see quite a lot of debenture stocks, or now called corporate bonds, because there is the general transition from the British nomenclature to the American nomenclature, because we have more American trained market operators now in the Nigerian capital market who are more conversant. We're using the American terminology. So for instance, we used to look at mutual funds, call it mutual fund. I mean, call it um, um, trust fund, unit trust funds in the past under the British system, but it's now being called mutual funds because we have more Americans coming. So also is the nomenclature where we usually had debenture stocks in the past, we now have them called corporate bonds. So you see a lot of corporate bonds now issued by corporate bodies, especially banks. I know that in secondary market of NGX, we have GT Bank bond, we have bonds by many other banks and corporate bodies that are traded in the market.
Thank
So
you.
the bonds are traded just like every other instrument that is listed on the secondary market of NGX or FMGQ.
Thank you very much for that, Professor David Adori. Now, let's quickly touch on treasury bills. We have to talk about treasury bills and the ETFs. Maybe we'll major in one of the assets before we close the show today. So let's get to it. Treasury bills.
Thank you. When we started this discussion, we tried to differentiate between the capital market and the money market. The capital market exists essentially for raising long-term capital and trading in long-term securities that emanate from the issuance, from the raising of long-term capital by issuers in the primary market. So we also have the money market, which is a market for short-term financial instruments. These short-term financial instruments are generally issued in the primary market by money market enterprises or operators like banks in the financial in the financial market, or the federal government and the central bank. So that is where treasury bills come in. So the main instrument, the main short-term instrument that is issued in the primary market of the money market is treasury bill, which essentially is issued by the Central Bank of Nigeria, in the case of Nigeria, on behalf of the Treasury Department of the federal government, which is now domiciled in the Debt Management Office, or DMO, under the presidency. So the treasury bill is a short-term instrument, debt instrument, issued by CBN on behalf of government to borrow money from the investing public. A treasury bill is usually a short-term instrument with tenor less than 1 year. The most popular is usually the 90-day treasury bill. It is issued at a discount, in which case, when it is issued, the par value is discounted by a discount rate. For instance, if the discount rate is about 10%, it means therefore that a treasury bill issued at a par value of 1,000 naira will elicit a subscription of 900 naira per unit by the investor. And so at maturity, the investor will redeem his 1,000 naira back. So he does not pay the usual interest rate that is paid by way of the coupon on the venture, but this is a discount. It's a discounted instrument. So, but in addition to the fact that Treasury bill is issued on behalf of the Treasury Department to raise short-term funds to finance recurrent expenditure of government, the instrument is also issued by the central bank to manage money supply in the economy. It's used to regulate money supply, in which case it can be issued in the primary market. Hence, we hear of the OMO, the open market operation, wherein the central bank issues the treasury bills in the primary market to increase money supply when it is running an expansionary monetary policy. But when it transits into a contractionary monetary policy, the central bank uses the instrument to withdraw funds by selling treasury bills to the investing public through the bank to mop up excess liquidity from the banking system in order to pursue a contractionary monetary policy.
Now, Professor
As we
David.
speak now, yeah.
Yes. So how safe is this product? I mean, the treasury bills. How safe is it compared to other forms of investments that we have mentioned earlier?
Yeah, you must have heard investment experts referring to treasury bills as a gilt-edged instruments. Okay, that is perhaps the safest security in the financial system. The possibility of default is very, very negligible. When it comes to a point, if there is going to be a default at all on treasury bill, it means that the economy is at the point of collapse. So it is a safe instrument. It is called the safest instrument.
Thank you. I know you mentioned earlier. Earlier that it is issued by the Central Bank of Nigeria. But for an average Nigerian that wants this treasury bills, how can you go about it? Do you need a middleman, or how do you have access to them directly?
Regrettably, the retail investor may not have direct access to subscribing to treasury bill in the primary market, because the way it is structured, the treasury bill is only sold to authorized dealers, and it is sold in a wholesale market, and that is why the federal government has come up with the federal government savings bond to cater for the special peculiarities of retail investors. So the objective, therefore, is to direct retail investors or the ordinary investor to the capital market where the retail investor can access federal government savings bond at a higher yield. But assessing treasury bill is usually through the authorized dealer, in which case the retail investor can only approach his banker or any other authorized dealer to buy little unit from such a dealer. Because
is that what is called the central? Is that what is called the secondary market?
No, yeah. So in the primary market, the retail investor does not have access, but the minimum subscription is 50 million. But there is a secondary market in treasury bills through the authorized dealers, or perhaps I'm not so sure of it. I don't also think so via FMDQ Securities Exchange platform. But there is a way through which the units, through which the bulk is broken down into units by the authorized dealers in the secondary market to enable retail investors that have assets. But generally, they don't have direct access to subscribing to uh, treasury bills. They only have direct access to subscribing to federal government savings bond, which is issued especially to meet their peculiarities.
Now, let's quickly touch on ETFs. I know that you have briefed us on what these instruments are, but let us focus on them now. Hopefully, we'll look at one particular instrument and how people can trade in this.
Yeah, by way of recap, it
Okay, I think we are trying to work on getting Professor David Adori back on that. So we're just talking about ETFs, and we really need to talk more on that. We just spoke about treasury bills. We talked about the maturity period, you know, the discounts that you enjoy trading in the trading with treasury bills and all of that. But I think we have Professor Adori back. Thank you very much for joining us once again.
We're very sorry for that interruption. Yeah, so I said just by way of recap that ETF is a fund that is constructed on a basket of securities and on some underlying securities, either commodities like gold or whatever, or securities like ordinary shares or bonds, you know, or stock indexes. These underlying the ETFs are usually structured as closed-ended funds, unlike mutual funds, and they are structured to replicate the returns of the underlying assets, you know. So essentially in the stock market in Nigeria, we have about 12 ETFs that are structured on shares, ordinary shares or bonds, or a basket of combination of assets in the capital market or indexes. We have I think the very popular one is Vectiva Griffith. It's very popular. It's structured on NGX 30 index, which is a basket comprising of about 30 iconic stocks in the equities market. So ETFs pay dividends like other stocks, and once they are issued in the primary market, they are listed in the secondary market and they trade like equities, wherein investors can give instructions to their stockbrokers to buy or sell for them from the secondary market, or investors themselves who have access to trading for themselves can buy and sell ETFs for themselves. So just like I mentioned, ETFs being collective investment schemes are designed to cater for the needs of passive investors who do not really have the capacity or the time to manage their investments. And so they purchase the ETFs from the fund manager or through their stockbrokers or directly, and they hope to reap the returns in line with the returns that the aggregate underlying assets return at the end of the day. I hope I've been able to clarify.
Yes, I believe you are doing well, Professor Adori, but for an average person that doesn't really know anything about ETF, what's the difference between ETF and the other stocks that we've been talking about, you know, fundamentally?
Okay, the ETF is a fund that is constructed on a basket of securities. For instance, we spoke about bonds. You can have a debt ETF take for instance, an ETF fund manager can buy about 100,000 units of federal government bonds into the fund, buy about 200,000 units of UBA bonds into the fund, and maybe buy about 100,000 units of treasury bills into the funds, and aggregate all these assets into an amount and break the amount into units, which is now sold in the secondary market to investors. So for instance, if at the end of the day, the total amount contained in that debt ETF is about 100 million naira, the manager can then break the 100 million naira capital into 1 naira each. In which case, each unit of that ETF will be priced at 1 naira. So the investor can buy, if he has access to trading, or give an order to his stockbroker to buy about 100 units of that fund. So 100 units of that fund will be 100 times 1 naira, which will be 100 naira of the fund, which will be bought by the investor. So such an investor will own 100 units of that ETF.
Thank you very much.
So at the end of the day, when dividend, is it understood now?
Yes, it is understood. Now, let us quickly talk about some basics as we close the show. For example, if you are trading in the Nigerian capital market, what are the trading hours? What are the trading days? And what are the documents you need to get from your stockbroker or whoever it is that is helping you to process your trade to certify that you indeed own those stocks in case issues come up in the future and you need to prove?
Okay, with the way technology has caused the automation of the Nigerian capital market, the investor has access to the trading engine of NGX, in which case the investor himself, using his mobile phone or any other mobile device, can access the trading engine, buy and sell by himself into his shareholding account, which he maintains in a stockbroking firm. So in which case, the investor knows how much he has paid to service his account, what he has bought, and he would see precisely what has entered his account, while trading. Or if he has sold, he will see what he has sold, he will see what has entered his account. The stock market on NGX opens for trading every weekday from 9 o'clock in the morning to 2:30 in the afternoon. So within this period, an investor can trade. But if you cannot trade by yourself, you can give the instruction to your stockbroker via what we call the Order Management System Platform, OMS. So once you give the instruction and your account is funded, all you need to do is transfer money into your stockbroking account with the stockbroking firm. And then the stockbroker will key in your order within this trading period. And if there is a trade on your account, there will be an alert, called trade alert, sent to your phone.
Thank you very much. That is well understood, Professor David Adore. I think with this, we know the basics. Every one of us out there can now go online or go out there, trade treasury bills, talk about ETFs, talk about common stocks and debentures and every other thing we have talked about on Business Insights this week. That's the size of the package. Today, I am Olaoluwa Awe. Thank you for watching and see you next week.